You have £10,000 sitting in your bank account right now, and you're thinking, do I buy Bitcoin or gold? One of these could double your money, the other could save it. But here's the real question. In 2026, with inflation still biting, markets going crazy, and AI reshaping the economy, which one actually wins? Stick around, because by the end of this video, you'll know exactly what to do. Welcome back to the channel. If you're new here, we break down money, markets, and investments in plain language so you can make smarter financial decisions. Today we're going head-to-head, crypto versus gold in 2026. We're going to look at 5 key factors: performance, risk, inflation protection, accessibility, and the future outlook, and crown a winner at the end. Let's get into it.
First, let's establish what we're actually comparing. Gold has been a store of value for over 5,000 years. It's physical, tangible, limited in supply, and backed by thousands of years of human trust. Central banks hold it, governments hoard it. Crypto, specifically Bitcoin, but also Ethereum and others, is the new kid. It's been around since 2009, digital, decentralized, and wildly volatile, but it's also produced some of the most jaw-dropping returns in financial history. These two assets couldn't be more different, and yet in 2026, investors are holding both for surprisingly similar reasons. Let's talk numbers, because at the end of the day, returns matter. Over the last decade, Bitcoin has massively outperformed gold. Gold in the same period has delivered solid but modest returns, typically in the range of 6 to 10% annually. But here's the catch. Bitcoin also crashed more than 70% multiple times. In 2022, it wiped out trillions in market cap almost overnight. Gold, it barely flinched. So if you're looking at upside potential, crypto wins, no contest. But if you're looking at consistent, predictable growth, gold is your friend. In 2026, with Bitcoin's halving cycle kicking in and institutional money pouring into crypto ETFs, many analysts are bullish on Bitcoin's near-term performance, but near-term in crypto can mean anything. Now let's talk about what keeps investors up at night. Risk. Crypto is high risk, full stop. Prices can swing 20, 30, even 50% in a matter of days. Regulation is still uncertain. Exchanges can get hacked. Projects can collapse overnight. Remember FTX, billions gone, just like that. Gold, on the other hand, is one of the lowest risk assets on the planet.
In times of geopolitical tension, wars, banking crises, currency collapses, gold historically rises. It's the ultimate safe haven asset. In 2026, with ongoing global uncertainty, gold is doing exactly what it always does, providing stability when everything else feels shaky. The verdict on risk? Gold wins by a mile. Here's one of the biggest reasons people invest in either of these assets: inflation protection. When the dollar loses purchasing power, people flock to hard assets, and both gold and Bitcoin are often called inflation hedges. Gold has proven this role over centuries. When fiat currencies collapse or inflate away, gold holds its ground. Bitcoin is often called digital gold, with a hard cap of 21 million coins. It's inherently deflationary. Theoretically, it should protect against inflation even better than gold.
But in practice, Bitcoin's price is still driven heavily by speculation and sentiment. During the 2021-2022 inflation surge, Bitcoin actually fell while gold held up. So as an inflation hedge, gold is more reliable right now. Bitcoin could get there, but it hasn't proven it consistently yet. Let's talk about how easy it actually is to buy and hold each one. Crypto is incredibly accessible. You can buy $50 of Bitcoin on your phone in under 5 minutes. You can send it globally, hold it in a digital wallet, and trade it 24/7. There are no market hours in crypto. Gold is accessible too. You can buy physical gold coins, gold ETFs, or gold savings accounts, but storing physical gold comes with costs. You need a safe insurance or a vaulting service. It's not as seamless as tapping an app. For the modern tech-savvy investor in 2026, crypto is more accessible and flexible.
For Bitcoin and crypto, the 2024 halving has historically triggered bull markets 12 and 18 months later. Spot Bitcoin ETFs now allow institutional investors to pour money in more easily than ever. Some projections for Bitcoin in 2026 range anywhere from $150,000 to even $500,000 per coin, though others warn of another brutal correction. Crypto is also evolving. Ethereum, DeFi, Web3, tokenized real-world assets. The ecosystem is growing in ways that could make digital assets foundational to the global financial system. For gold, central banks around the world, especially in Asia and the Middle East, are buying gold at record levels. De-dollarization is a real trend. A potential global recession, ongoing wars, and banking instability all point toward gold demand staying strong. Gold won't make you rich overnight, but it will still be gold in 10, 20, 50 years. Crypto might be the financial system of the future, or it might look very different than it does today.